Welcome back, everyone. You may be familiar with the concept of a mortgage, but when it comes to the particulars, a mortgage is a rather complex marathon of financial calculations, comparing offers, and various approval stages. In a word, it's overwhelming. So here to walk us through a spring mortgage checkup is our financial expert, Bruce Sellery. I've missed you.
Hello, it's so great to see you. We will deal with the overwhelm. We will break it down.
Yes.
Calm breaths.
Yes, we will breathe through it. So
Yes.
what are the two things to remember when it comes to doing a spring mortgage checkup?
Number one is you need to become a temporary expert.
Okay.
So you're going to learn, you're going to research a bunch of things, and as soon as that mortgage is signed, you can forget it all. Forget it all! We had a problem with our dishwasher, so I go on YouTube, I research everything, I buy the part. I am so good. I believe I could be an engineer for Elon Musk launching satellites into the atmosphere. As soon as I close the door on that fixed dishwasher, I forgot it all. It's all gone.
It's gone.
So temporary expert, and also don't simply renew with the lender you have been with in the past. Be loyal to your hairstylist, not your lender. And the reason is it's such a big decision. It really can make a big, big financial difference. So you really do need to do the research.
You got to shop around.
You have to.
Okay, what specifically do you need to research?
So I think the first thing is researching a great mortgage broker, because there's someone who has access to lots of different options out there. They will help you navigate some of these things like fixed versus variable, like the features that you could get. So, for example, some people want to have the ability to contribute a lump sum to their mortgage. That's a feature that not all mortgages have. There's something called a payment vacation, which if you're having a baby and you're taking a maternity leave, that might be of interest to you. So you need to learn about rates, you need to learn about those features, and a broker is a great person to help you do that. It's not free, so you don't cut a check for their services, but they make about just a little less than 1% on your mortgage, so that costs you about $5,000. If you go to a bank, your mortgage specialist is also paid, as they should be, but just be aware that this is a service that you're paying for. And
would you say it makes sense to actually get a broker that is not attached to a financial institution so that they're giving you the full gamut of products out there that they can offer?
Yes. And one thing that sometimes happens is the mortgage broker does the work, and you might even end up renewing with your regular bank, either through the broker or directly, but they can give you a bigger picture perspective on all the things. The bank does not begin with their most aggressive rate. If you're like, oh, yeah, just renew me, they're not going to begin with the most aggressive rate.
Yeah. Okay. I like that. That's very good advice. The number one question we get all the time from our viewers and people want to ask all the time, fixed versus variable. What should you be leaning into? What is the difference? What should you consider?
So it is math and mindset. So variable rate is a rate that can go up or down with interest rates. A fixed rate for that 5 years, the rate is the same, all that. The math actually favors a variable rate mortgage. It has in the past. So over very long periods of time, you will pay less interest if you chose a variable. On the mindset front, though, some people just sleep better knowing that their rate is fixed. And I think that counts. We don't want to minimize that. That's really important. But you're paying for insurance. You're paying for an insurance policy. And so working with your mortgage broker or your mortgage specialist, help them, ask them to show you what that means in dollars, and you'll see whether or not that insurance is really worth it to you. There is also a product out there that is variable but has a payment that stays the same. So as rates rise, you're just paying more towards interest, but you're not worried about, I can't buy groceries because my mortgage payment has gone up. And there's another one that's a hybrid. 50% variable, 50% fixed. So this, again, goes to the research. It's like, what's going to work for me?
And this is just, me asking a personal question, because why not? You're here, and you're a finance expert. We know rates are going up. So isn't this the time to say lock it in?
I would say no, because you're going to pay more for fixed versus variable today. So I have been someone who has had a variable rate mortgage my entire life, because that mindset-wise, I want the best chance of the least interest payments, and I don't need that certainty that my rate is going to be the same. But I'm one person of 32 million in this country.
I hear you. I get it. Yeah, it makes a lot of sense, though. Can we talk about penalties? Which is probably not a nice thing to talk about, but you need to know about penalties if you've got a mortgage.
Especially as you think about fixed versus variable. So I was talking to this business executive who moved from one city to another and couldn't take her mortgage with her. She actually was going into a rental. She did not know that she would have to pay a penalty. It was $30,000 $30,000 because it was a fixed rate she was breaking. Had it been variable, it would have been $4,000.
Oh.
So as you think about the next 5 years, remember that life happens. You could need to move, you could get transferred, you could get divorced, there could just be some reason. And so you need to have that in the back of your mind because that penalty can be massive.
Yes. What about penalties just on missing a payment?
The penalty there is to your credit score. So you have made a deal with a lender. If you do not pay that amount on time, it's going to be a big hit to your credit score. It's the last payment you want to miss.
That's right. Okay.
One step up from organized crime, where you're going to where they're going to come and break your legs. Don't do it. Don't do it.
Can we talk about insurance?
Yes. Mortgage default insurance is what you will need to have if your down payment is less than 20%, and it's expensive. It could be like 20 grand. So in this time, trying to find the down payment is brutal in most parts of the country. The other one that people talk about is mortgage life insurance, and that is if you pass away, your mortgage would get paid off by that particular policy. I'm not a big fan.
Okay.
I think the better way to protect against that, mitigate that risk, is term life. So a term life insurance policy that is a sufficient amount to pay off the mortgage, it is cheaper and has a lot more flexibility for the family that you leave.
Very good. Okay, before you go, tell us the big mortgage pitfalls to avoid.
Okay, in addition to paying the penalty, which makes me crazy, people who renew like a robot, don't do that. Shop around. Eroding your equity on renewal. So a lot of times people will see that as a great opportunity to roll in all their consumer debt, and they put all that in there. That's great. It's going to be a much lower rate than you would pay with your credit card company. However, there is a risk that you start to use your house as an ATM. And 10 years, 20 years down the road, your house price has risen dramatically, but you kept stealing the equity to pay for your life that you don't have a lot of equity built up. Then the last one I would say is taking on a bigger mortgage than you can afford. And you have to remember that the lender is looking at affordability from the perspective of the risk that you're going to default, right? That is a very different calculation than you as an individual would do, because you're like, I need groceries, I want to take a vacation, I might need to renovate, my kids have to go to school. So your affordability needs to include all of those things. And I understand the dynamic here, right? The house prices are ridiculously expensive.
Astronomical.
But just because a lender will cut the check for you to borrow $13 gazillion does not mean that you should.
It doesn't mean you should. There's a lot of self-awareness involved when it comes to your finances. So really good advice. Thank you for that, Bruce.